I don't think it matters who's president. Bitcoin's going to continue to go up because the dollar is going to continue to go down. Doesn't really matter who's president of the United States. I've been pretty vocal that I think we're going to have sovereign debt crisis and the deficits are just too big. The thing that would be bearish for Bitcoin in the short term is if we entered a real prolonged, painful recession. It doesn't matter how strong your asset is. Everything sells off in those type of moments. I do think that financial markets prefer Trump. We know that at this point. Bitcoin and financial markets prefer Trump. Whenever something good happens, Bitcoin and financial markets trade up to Trump. And whenever something bad happens to Trump, then they trade down.
The Federal Reserve's unexpected 50 basis point rate cut has shaken the financial world, including cryptocurrencies like Bitcoin. This move, the central bank's first rate cut in 4 years, has fueled debate about Bitcoin's endurance in economic instability. Strike's CEO, Jack Mallers, provides insight into Bitcoin's behavior, noting the hash rate as a major cause of price fluctuations. According to Mallers, financial markets support Donald Trump's objectives, which seek to weaken the dollar and increase exports through tariffs. Notably, he believes Bitcoin will grow regardless of the election results, due to increased government spending and asset inflation, supported by both parties' commitment to spending. According to Jack Mallers, Bitcoin's hash rate consistently leads to price fluctuations, with difficulty adjustments occurring faster than price rises. This fuels speculation, driving miners to increase capacity and forcing smaller, poorly funded miners to sell their assets. Mallers points out Bitcoin's link to bigger economic issues, such as national debt crises and monetary policy decisions. He claims the market is waiting for clarity on financial authorities' actions, particularly those involving liquidity injections. As we bring you clips from his recent interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy the video.
I also think people just need to chill out. This happens every Bitcoin cycle where hash rate leads the price almost always, meaning the difficulty to produce new Bitcoins goes up faster than the price does. I think people are speculating on the expectation that the halving is going to cause new price discovery and higher price momentum, and people plug in more miners. And what that usually does almost always is it makes the smaller miners puke on themselves and have to sell all of their Bitcoin. So you usually, just for context, we talked about the 2017 bull run last time. Just so everyone knows, the halving that cycle was in 2016. I think it was April, May 2016. And then just so everyone knows, the all-time high at that time was $1,200, $1,200 per Bitcoin. That was made in 2013. And then Bitcoin tumbled and crashed, multi-year bear market. And the halving was either early summer, late spring 2016. And then Bitcoin went from a couple $100 to $1,000 and didn't actually make a new all-time high and didn't actually go on the bull run to hit 20K until 2017. So it didn't really start moving until a year after the halving. And what you usually see is hash rate leads the price. When it gets more difficult to produce Bitcoins, the miners that aren't very well financed start to fail. And before they fail, they sell all of their assets in an effort to stay alive. So you see not only selling pressure from seized coins and legacy holders that have to puke, whether it's due to the law or bankruptcy or whatever else, but you almost always see smaller, less financed miners have to kind of give in and tap out before the bull market starts too. And these bull markets usually start, this was the first time we saw all-time highs around the halving or before the halving or shortly after the halving. And so I don't know, this is like pretty normal. I don't think it matters who's president. Bitcoin's going to continue to go up because the dollar is going to continue to go down. Doesn't really matter who's president of the United States. I've been pretty vocal that I think we're going to have sovereign debt crisis and the deficits are just too big. I think that markets I think people are just waiting on the sidelines right now. The thing that people underappreciate sometimes about financial moves and liquidity from financial authorities is they'll tell you in plain English that they're about to inject liquidity. So I don't think markets really like to try and lead them that much. Because listen, the thing that would be bearish for Bitcoin in the short term is if we entered a real prolonged, painful recession. It doesn't matter how strong your asset is. Everything sells off in those type of moments. And because people sell what they can, not what they want when there's pain. And so I think that there's general concern about a recession, and a recession that would be very painful, very bad. People talking about metrics that draw it to the Great Depression and all this stuff. And so my overall opinion is there's no need for financial markets to assume that financial authorities are going to prevent a recession by injecting a lot of dollar liquidity and pumping assets until they literally tell you they will, because they will. Janet Yellen will come out and say, I'm going to reinstate the ABCDE Act in order to prevent Putin from farting. And then everyone's like, oh, okay, got it. Perfect. Assets are going to go way higher. So I think everyone's just waiting. We're waiting to see what the Fed is going to do. We're waiting to see what the Treasury is going to do. We're waiting to see how they're going to treat this election. That's how I viewed Bitcoin. I mean, Janet made some pretty critical dollar liquidity decisions in late 2023. And I think the repository that she was using to inject dollar liquidity started to bottom out and tap out in the spring of 2024. And that's when you saw Bitcoin go from 20 to 70, 20,000 to 70,000, just like that, right off of what Janet Yellen was doing. And then since, she hasn't made any decisions. And what has Bitcoin done? It's basically chopped sideways from March, April to today.
Jack Mallers believes the Federal Reserve's interest rate cut will have minimal effect on financial assets. He expects markets to quickly factor in future rate cuts. According to Mallers, financial markets favor policies that weaken the dollar to boost exports and address inflation through tariffs. He also compared Trump's approach to the Democratic agenda, which he claims lacks financial knowledge. He adds that both parties are committed to additional expenditure, raising asset prices, and boosting the dollar supply. Jack Mallers believes that Bitcoin and other assets will prosper regardless of the election outcome. He sees Trump's objectives as financing government spending through growth, asset inflation, production, and income through higher capital gains taxes. Watch more clips from the interview to gain more insights from Jack Mallers.
I don't think the Fed cutting 25 basis points is going to do much for financial assets. As far as the actual candidates,
as soon as they cut 25 basis points, then we get to start pricing in the next 25.
Yeah, I mean it's the right direction for sure. I think it matters more to probably the government financing their debt, these rate cuts, than it does. Powell's not making any decisions based on inflation metrics or anything like that. I do think that financial markets prefer Trump. We know that at this point. Bitcoin and financial markets prefer Trump. Whenever something good happens, Bitcoin and financial markets trade up to Trump. And whenever something bad happens to Trump, then they trade down. And if you want to see if something was good or bad, like the debate, you can look at financial markets. Like Bitcoin traded slightly down, financial markets traded slightly down. So I don't think the markets loved his debate performance. And that's not my opinion. That was the market's opinion. So I think from my understanding, I'm not a politics guy. My position is Bitcoin can help solve a lot of the world's hardest problems, and it doesn't matter who gets elected. That's just my position. So I'm a political novice here, but I do, if I understand Trump's policies correctly, he wants to weaken the dollar purposefully to be more competitive in exports, I think. And he's going to, you'd think, well, if you're going to purposely weaken the dollar, isn't that going to cause even more inflation? And his inflation fighting is through tariffs. Is he protects the price of our lives by being mean to other countries, basically. And so that's Trump's stance, is I'm going to cut your taxes. Why would you cut taxes? Why is that good? Is because it spurs more growth. If people have more money, then they can spend more. They can start more businesses. They can do more shit. And so Trump wants to cut taxes to drive more growth. He's going to weaken the dollar to make us more competitive in exports. And then he's going to just put a gun to other countries' head with tariffs to protect the cost of our lives, which is another way of saying taming inflation despite a weaker dollar. Financial markets love that plan. That sounds great. I pay less taxes to the government. I don't have to deal with any inflation. The cost of living is not going to go up. And the dollar is going to weaken. So all of my financial assets are going to go higher. And so I think that's why they prefer Trump. Whereas the Democrats don't seem to have any financial literacy or plan. In my opinion, it seems just different approaches at financing what both parties are running on, which is spending more money. Trump wants to finance spending more money by increasing the tax receipts. You know, the main way that the government finances their debt is our capital gains tax. That's another reason I'm so confident that we're going to see probably the greatest asset bubble in the history of humanity, is because if they're going to have the highest deficit and debt in the history of humanity, that has to correlate with asset prices, because that's the only way they can afford it. What happens is they send your S&P 500 portfolio, your real estate, your Bitcoin, your JPEG, your NFT, they send everything to the moon, and then you sell it and you pay them, you know, what is it, 25, 30, 40% taxes. And so Trump's position is, I'm going to debase the dollar. I'm going to have you pay less taxes to me, spur more growth. Your cap gains should shoot up tremendously. And I'll be able to finance my government spending through growth and through asset inflation. Now, the Democrats, I don't think, seem as literate. And they're like, we're going to finance our government spending by taxing unrealized gains on rich people. And it just is, the point is, the point, in all seriousness, not to pick fun at sides, the point is they're both running on spending more money. Both the Republicans and the Democrats are campaigning on spending more money. In the short term, if Trump wins, I think financial markets and Bitcoin will be more excited. That doesn't matter, though. They're both going to spend more money. They're both going to increase the supply of the dollar. They'll both send Bitcoin and other assets higher.
Mullers emphasizes clarity as essential to Bitcoin's price movement, and the market is waiting for authorities. Economic unpredictability, particularly recessions, affects Bitcoin's performance, although its resilience is sometimes underestimated. This resilience was recently tested following an extended period of uncertainty. The Fed's decision came after significant speculation, with more than $55 million gambled on prediction markets such as Polymarket. This rate cut deviates from the Fed's monetary tightening plan for 2022, which is intended to reduce inflation. The change may boost Bitcoin, whose distinct qualities make it an appealing cover against economic instability. As the world of finance changes, Bitcoin's resilience will most certainly be tested further, revealing its potential as a store of value during times of uncertainty. The central bank maintained its cautious approach until July 2023. In contrast, the European Central Bank has slashed interest rates many times this year in response to falling Eurozone inflation. Bitcoin rose sharply in response to the rate cut, reaching a high of $60,900 on CoinMarketCap. This substantial increase demonstrates cryptocurrencies' potential as a hedge against economic volatility. The rate drop indicates a shift in monetary policy, directing liquidity to riskier assets such as Bitcoin. This decision may improve cryptocurrencies' appeal as an alternative cover, enticing more institutional and ordinary investors. What are your thoughts on this interview as the Federal Reserve rate cut continues to make headlines? Will the outcome of the US election significantly influence Bitcoin's value? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.